Hi guys, this is Forte. It is December 26, 2022. As you can see, I went from drinking Fiji water to Ice Mountain and in this year, which means that the market has been really rough. All right, let's get started. Take out your note and pen. We're gonna have one trade idea. Let's get your pen and notebook out and let's get started. And let's review this year a little bit too. 2021, the market had a phenomenal year. It was a late stage bull market rally, and I performed badly on that. And on top of this year's bear market, I performed extremely badly at the beginning of the year. And later on in the last basically 2 months, right, I've been performing pretty well with this rally. And we're pretty much back to not breaking even. I'm losing money, but not by too much. It would have been a lot, but the last rally kind of saved me. And let's talk about this market real quick. Let's talk about what's going on right now. This is the S&P, the SPY 500, right? And out of relative to the Nasdaq, SPY has been holding out relatively well from this market we had starting in October, right? We had a big rally above to the 50-day moving average, and then the 20-day moving. Excuse me, guys, on that. It's I'm gonna turn that sound off on OBS. I'm very prepared again. Let me just make sure I didn't mute my mic. Okay, because last time I did. So the market rally is starting October, right? And then we got above the 20-day moving average, and it got above the 50-day moving average. Around November, beginning of November, the 20-day moving average crossed the 50-day moving average. And then the distance between them started expanding. The market started going up, right? But we still have the 200-day moving average that we're battling, right? As of right now, we're above. We're below the 50-day moving average. We have a rising 50-day moving average though, but the 20-day moving average is coming down, and then at the lower time frame, we just got above the 5-day moving average, and it's still declining a little bit. So right now, this market is extremely neutral on the near term, but when you stretch it out, we're still on a downtrend, right? But what's usually the downtrend is what's gonna happen next is after a downtrend, like we're going to see. So for example, if you call bottom here, right, nobody's gonna believe you unless this is bottom, and then you're gonna be a genius right there. What I'm trying to say is, don't get too struck by the idea that we're on a downtrend. A bull market could start anytime right now. I'm not recommending everybody to catch the knife, because when a bull market starts, it's not like a 1 or 2 day thing. It's gonna last for years, right? But I just want everybody to know that it can start anytime, and even though we're on the downtrend, things could turn pretty fast. Because on December, I think it was 15, somewhere around this area, the Fed actually had a message about raising the interest rate by 25 basis point, and that was a pretty big move. It was 25? Was it 50? Shoot, I don't remember. I'm pretty sure. Was it 25? Oh my gosh, I am very prepared for this video. No, December 14, the Fed raised interest rate by 50 basis point, which was before that it was 75 basis point for 3 consecutive FOMC meetings in a row. And as of this month, they raised it by 0.5. 50 basis point, which means they are still raising the rate. The rate on the near term is going up slower than before, but we're still going up, meaning that the stance in the market didn't really change too much unless everything's priced in, which we don't know. We as a retail trader, we have no idea. What we need to be paying attention is the breadth of the market. Are you seeing stocks setting up? If so, in what sector, right? I'm starting to see energy stocks starting to fall apart a little bit, and tech stocks are still pretty bad, right? We got Tesla. It's just making lows every single day, right? Tesla is finally falling apart. Apple is starting to fall apart. We have this final band of potential support coming in, but nothing could, like I said, potential support, meaning that doesn't mean that it's gonna hold. Doesn't 100% mean it's gonna hold, right? And if we take a look at QQQ, we are pretty much at the all-time low right here. We are about less than 5% away from hitting an all-time low. So we want to avoid technology stock going to 2023. And I really don't see the market. This is my personal opinion. It could change because the Fed is slowly raising interest rate, and because they're slowing down, which could cause some stimulation in the market, but they're still raising it slowly, meaning that I don't think the market will do something like this, like we just go straight out V shape, go back up again. I think what's going to happen in 2023 is likely we're going to have a pretty range bound market because we need a lot of time to digest all this in. And then, so, in 2021, 2022 this year, the market kind of fall down and the price scare people out. And I think the next stage is that this thing will have to wear people out, right? I think the market will go flat. That's my opinion. I could change my opinion starting next month. Who knows? But in a range bound market, that means that you have really little space to make any mistakes. Your entry needs to be precise. Your stop loss needs to be respected. And if you FOMO any bit, if you make any mistake, likely the market will just slaughter you. So in 2023, please be very prepared to be more than disciplined than ever, right? Because in 2023, I believe there will be money to be made in the market. Because I think we're slowing down because the Fed is raising interest rate to protect inflation. And inflation is it has already peaked, right? If you look at the data in the last two consecutive FOMC meetings, they present us with the inflation data, CPI, and it's not going up anymore, it's going down, right? So, and if this whole downward trend is caused by inflation, then we likely have already seen bottom, at this point. Since if inflation has bottomed, then that's what it is. And there's some more I want to talk about. Really don't expect the market to go straight up into all-time high. I think this is gonna take years to recover because the Fed did everybody talks shit about the Fed, right? But let's take a look back right here. The Fed has been raising interest rate and throughout these couple years, right? And this is before 2020. And then when 2020 hits, COVID hits, right? The economy and the stock market went into turmoil, and immediately the Fed lowered interest rate to zero, and that caused a big stimulation into 2020, the rest of 2020 into 2021, right? And then with that, the market rallied bigly, and now we have inflation problem, which is it's pretty obvious inflation is going to come if you raise interest rate to zero and then start printing out money and give it to the citizens, right? It's really obvious they saw that coming. And with inflation coming out, now they're basically they're the driver for this move down here. Like usually when a crash happens, a stock market goes down, what the Fed usually does is they will lower interest rate to zero. But instead, they're the one that's raising interest rate and they're the one that's driving this bear market, which means they're in complete control, which tells me that I think the market is actually in a healthy state. I think the economy is also in a healthy state. Forget about what everybody else says on Twitter. Forget about what you think. Forget about how bad, all the prices and everything are. The Fed is literally driving this market down, and the market is coming down. So there's nothing like that's. I don't think there's anything out of control here, in my opinion. So I think that if this can be taken care of pretty well, we will see a lot of good opportunities in this market, right? As of right now, let's go back to stuff that actually matters, individual stocks. As of right now, you want to avoid tech stocks because that's what we don't want to trade. And comes a lot of building construction stocks like, TGLS it's holding up pretty well. The only concern I have this one is that last year it dropped 30-some percent. I think there was a research on the CEO being a cocaine smuggler or something. But other than that, volume profile looks pretty good, and it's a pretty big concern. So please be very, very careful. And Another stock is Elf. I know if I have some I do have female viewers that probably knows the stock. They sell really garbage products for makeups, and but the thing is, this thing has been rallying like crazy, right? It's went up 173% in the last 6 months, and then in the last 1.5 months, it went up about 50%, and then we put in about 5 week tight consolidation right here, and the consolidation is tight. It never went more than 10%. It's a really tight consolidation. 50-day moving, the 10-week moving average is rising. We're above the 20-day moving average and the 50-day moving average, and we're above the 200-day moving average. And if we can see this thing get above this high, I can see this being a purchase. Some other stock that I do not recommend personally, but you could buy, EMPH. It's a really crowded name. I think it's a growth name, but it's extremely crowded, and it's in the technology sector, which is why I've been avoiding it, even though solar stock is kind of leading. I think they're kind of falling apart as of right now. But yeah, other than that, that's all I got. ELF and TGLS. TGLS, I want to see this thing consolidate for at least 2 more weeks, which is perfect. We have the Santa week that we're gonna have, and then the New Year's week, which is gonna be 2 holiday weeks, which can put in really low volume, and we get to see what the retail buyers wants this stock to go on low volume trading, right? We could tighten up a little bit, maybe put in like next week, you do something like this in an inside week, and then on daily chart that will be set up really perfectly, and then we find entries on the 15-minute chart. And TGLS, I already have a position from here, right? And I am holding it. I am looking to add into this stock. I am about up 20%, but that's pretty much it. It's not a really small position because of the cocaine smuggler CEO, and it's not an American company, it's a Colombia company, so you do want to be a little bit careful. Not as bad as Chinese company, but hey, it's not a US company. And that's pretty much it. And thank you guys for watching. And I enjoy to have you guys in 2023. Okay, 2022 has been rough. 2021 has been weird, Let's hope 2023 is our year again. And I'm still here. I'm still around. Don't worry. I know a lot of trader YouTubers got fined, all that stuff. By the way, like I said, all my videos they're my opinion, right? None of this is a financial advice. I am simply a guy who trades stock and like to talk about stocks. I like stocks. That's it. And see you guys next year, 2023. Hopefully I can go back and drink Fiji water again. Life no easy. All right, peace.